Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stock Trading Pro. In today's episode of our Stock Market Live, we're going to take a look at this bigger picture that's going on in the market now, specifically with this very popular chart pattern that's unfolding in the S&P 500. A lot of people say that this chart pattern leads to a much bigger move to the downside. We're going to take a look at that. We're going to take a look and see if that happens, what price action in the stock market would look like. Would that lead to a bigger stock market crash, or does that tend to lead where everybody's looking at the same pattern where it triggers and then goes back in the other direction? We'll see. We're also going to focus on a sector or industry group of stocks that have gotten beat up pretty good for the last 6 months, specifically over the last 2 months since January of 2022. Will they be rallying now heading into the FOMC announcement this week? And I'm specifically talking about financial sector. I'm talking about bank stocks and whether or not they're going to reverse. There's one particular stock that has a pretty big exposure to Russia, and they're not expected to bounce, even though it looked like they had some bigger volume last week. So if you dug a little deeper into tape reading, it looked like they were about to bounce, but they didn't. So we're actually going to go stock by stock. We're going to break it down. We're going to go from sector to industry group and determine which ones of those stocks are the best stocks to buy now. We're also going to talk about a trading book. I get a lot of questions about what's in the background over here. Those are all trading or business or self-development books, and that's just a small part of the library. So I'm going to share another one today. I get some really nice feedback on what's back there. But we're actually going to talk about what I think is the most, depending on where your head is, if you're an athlete, the most important story of the day is Tom Brady has unretired again. The most ridiculous thing I think I've ever seen in my life. I don't know how many of you out there are sports fans, but the guy's 43 years old. I understand his competitive drive. I would personally be taking my money and going into the booth and do what Tony Romo did and just go and talk for the next 25 years and get paid $20 million a year for it. But he's choosing not to do that. So anyway, we're going to get right into it right now. So stick around. Be back in just 1 second. Okay, so thank you so much, everybody, for joining me. As with every day, every video that we do, every Stock Market Live, whenever we talk about the best stocks to buy now, it's educational purposes only. It's up to you to make that final decision. We're going to work our way over into speaking about the Fed this week. We're going to talk about the big pattern that's unfolding on the S&P 500 right now. We're also going to do a little bit of a deep dive into oil versus airline stocks and how that might be playing itself out in the market right now. If we hop on over, and first thing we're going to do is we're going to take a look at the market itself and work our way across here. So this is the pattern that everybody's talking about. We're actually going to take a look at it on the S&P 500 chart, the S&P 500 index, also known as the SPX. You know, there's actually three different ways to look at this. You could look at the SPY ET futures, or you can look at the SPX. I know a lot of people just use the raw number of the SPX. If you don't know, the stock futures contracts expire every period. So, for example, the S&P futures contracts is every quarter. So you have the March contract, the June contract, and so on. So right now we're actually trading the March contract. So the reason some stock traders use the SPX is that it's a continuous rolling. It doesn't expire. There's no volume considerations with volume is going from the March contract into the June contract. So we're actually going to use the SPX chart and technical analysis right now. So essentially what we're looking at is this here. The last time this happened was way back here in the pandemic fueled rally, which was right around July of 2020, give or take whatever day that happened to have been. Now, there's two different versions of this chart pattern, technical analysis pattern, whatever you want to call it. So the reason we're talking about this in the first place is before you choose the best stocks to buy now, you want to understand what the bigger picture of the market is and what is the likely next move in the market. So when this happened in July of 2020, obviously we were coming out of the pandemic, which, by the way, we saw some new news this weekend about the virus spreading again in China, which is really, God, I don't know about where you live, but right now I felt like we were kind of out of it and going out of the house and feeling kind of comfortable. Let's hope that it's just one last burst. So when this happened last time, it started and led to a raging bull market that lasted for the better part of 18 months. Now, obviously, quantitative easing was involved in that. There was a whole bunch of other factors. We're clearly not in that same market scenario right now. We are in a bearish market and in a big way right now. And you can see actually how we closed on Friday. So if you're a regular viewer of the channel, you know that we like to keep things as simple as possible while we're making trading decisions. We like to see the push and the pause. So when we push up and pause, we manage risk during the push and we make money anticipating the next pause. So how does that factor into what's going on right now? And how does that play out into the bigger picture, looking at stocks to buy? By the way, we're also going to take a look at this sheet as well today, which is the research document that I show everybody at the beginning of every week. But we're first going to get into this. So we have a push down and a pause, 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 a push down and a pause. So we clearly have bearish activity right now. We are below all key moving averages in the SPX, the S&P 500, and the thought of buying stocks, the top stocks to buy now have to have relative strength because the bigger picture of the market is pushing down. Those are the higher likelihood stocks that will move up towards your profit target versus pushing down and hitting your stop loss. And think about it. When you're looking to set up your trades, we get a ton of really great questions, both here on our YouTube channel, as well as in our Facebook group and here now, which is, how do I know what stocks to buy? And it really comes down to, we had a question last week that somebody had said, how do you have so much confidence in that stock going higher? And here's the biggest thing I want to get across to you, because it relates directly to the S&P 500 and how we're setting up these ideas. I don't have absolute confidence that every trade's going to work out. I have absolute confidence that over a large sample size of trades, I will make money. That's how professional traders make money. So if you're struggling with the thought process right now, or the mindset of wondering how winning traders think differently, that's really what it comes down to. I don't care if each individual trade makes money or loses money. What I care about is, did I trade well? That's the big part of trading. So I want to bring that into this book right here, and you can actually see it here, Trading to Win. Now, there's actually two different books called Trading to Win. One of them is by Mark Douglas. A lot of people know. This is a different author, though. Let me see if I can pull it up, hold it up there a little bit. Trading to Win by Ari Kiev. It's actually a little bit of a different name. So you can see his name right here. I'll put that up there for you. Now, the reason that I bring this up is, if you don't know who Ari Kiev is, he was an Olympic performance coach who actually ended up going and being the performance coach for Steve Cohen, who is now the owner of the New York Mets. So he was a very big part of their success. If you watch the television show Billions, you know that Wendy Rhodes does the same thing for that hedge fund. The reason I'm bringing this up, and if you don't know, I had a trading firm. I had two firms, actually. The second firm was probably a little bit bigger firm called Keystone Trading Group. We were in New York City. We had a very common question that got asked by new traders, new prop traders coming into the firm. And it really came down to this: what kind of goals should I set? And Ari Kiev spends a lot of time in this book talking about trading goals and allowing yourself to step into an area that you are uncomfortable with to achieve those goals. You have to actually map out the steps that it takes to get there and create a lot of if-then scenarios. But even with all of that in the equation, you still have to let the odds of your edge play itself out. I personally, and I want to say this, it might be a little controversial. Yeah, exactly, John, SAC Capital. It might be a little bit controversial, but I don't believe in setting daily goals for trading, because if you think about professional athletes, and let's use baseball as an example. Obviously, we just mentioned Steve Cohen and the New York Mets. Baseball players care about how they did on a daily basis, but they are more concerned with how they did over the season. And traders should actually think about that the same way, because let's think about it. Let's say you set a goal for $500 per day, which is a very, very common trading goal. And every trader worth their salt knows whatever number you pick, you multiply that times 20, because basically 20 trading days, you can kind of forecast out what you'd like to make for the month. You know, you pick the best stocks now, you figure where you're going to end up at the end of the month, right? Here's the problem with that. What if today was a tough day to trade and you chose that you wanted to make $500 per day and you want to strive trading towards that? And now let's say you lost $300. So now tomorrow, do you go into tomorrow saying, now I need to make $800 because I not only need to, not 800, you need to make the 500 from yesterday. You have to make back the 300 that you lost, and then you have to make the 500 for today. So now you're jamming the goal that you set on a daily basis into tomorrow, making back what you lost, getting positive for yesterday's P&L, and then also making today's P&L. So that basically turns, instead of making $500 for the next day, you now have to make $1,300 to hit your goal for the 2 days, because you have to make back the $300 that you lost. I'm not a big fan of that. If you want to raise your trading insights or trading mindset to the highest levels, focus on trading well and really, really do a good job of documenting your trading during the day, throughout the day. Focus on whether or not you followed your plan. Focus on whether or not you actually have an edge and you only look for stocks that meet that edge. And then at the end of the week, then go into Saturday and say, okay, let me recap what I did this week, and I'll see where the P&L ended up. Professional athletes do all of their practice so that they can execute flawlessly. And then at the end of the game, at the end of the month, the end of the season, they are focused on the results over a larger period of time when they were in the game, when they were in the arena executing. So if you want to take the stress off of hitting your goal at the end of the month, and I know this sounds controversial, however you want to word it, and I'm telling you this from experience, because the whole point of this is what I did with my firm, is that focus on the process, and whether or not you're flawlessly following that process, everything will work out over time. The biggest challenge that traders come in, and this is actually why we don't have a monthly membership for the boot camp. It's you sign up for the boot camp and then you move your way over into an annual membership, because you can't judge a strategy simply based on a couple of days worth of trading. You need to see over time. You need to see great market conditions, tough market conditions, bullish market conditions, bearish market conditions, choppy market conditions, crazy good market conditions, and crazy tough market conditions. That's how you judge the strategy over time, but you're also judging yourself. And that's the part that a lot of people don't take into consideration. You're not putting yourself into the equation. It could be the strategy works, but you didn't follow it. Professional athletes, the same as myself as a professional trader, you need to be more focused on, does my edge work? And did I actually follow it over a large sample size? I can't stress this enough. If trading drives you crazy sometimes, look, nobody likes losing money, but if trading, buying and selling stocks drives you crazy sometimes, it's probably because you are putting too much pressure on each trade needing to make money. Stop doing that if you want to act and think like a professional. Professional traders are more focused on a larger sample size, because the very definition of edge means over time. It also over a large sample size. And the very definition of edge means some wins, some losses, some likely to happen, some not likely to happen. But over a large sample size, you should come out on top if you have good money management and you learn how to manage the winning trade. So again, if you're not a part of our boot camp, I'll just give you a kind of like an insider guide to what we do. The first part is understanding the edge. The second part is fine-tuning your entries and exits. Then the part that happens between entry and exit, which is trade management, is kicking out the losses and understanding how to make more on the winners. Now, here's the part that I want to get across to you. That's probably the most exciting thing. Once you understand and have an edge, which I give you, once you understand and have entries and exits, which I also give you, it's up to you now to take the action of getting out of the losers where we said we would. They just didn't follow through, which, by the way, that's big language as well. The second part is understanding how and when to hold your winning trades longer, which is actually what we're going to take into consideration now when we head over to the charts. So this bigger picture in the SPX right now is implying that if the 50-period moving average crosses below the 200, that it's going to lead to a much bigger move to the downside. It's known as the death cross chart pattern. The other side of that is the golden cross chart pattern, which is what we showed before in the 200, the 50 crossed above the 200 in July of 2020, and that led to that raging bull market. Now, there's other factors on the table right now. We've been selling off since January of 2022. The market has actually been in a decline since then. So we have all of this bearish price action with the Fed expected to announce this week. So you have the war that's going on in Russia and the Ukraine, and our prayers go out to everybody who's in the Ukraine right now and everybody that's affected by that. We also have the FOMC announcement that's coming out this week. We also have energy prices being affected by the war. We also have inflation, which is skyrocketing gasoline prices right now, and a bunch of other things. So now we're here to think about how do we tackle all of these things in the context of being a trader? How do these headlines lead to trading opportunities? So we talked about it last week when we looked at the energy stocks. They were still clearly in bullish order flow. There's not even a question. We had this push, we had this pause, and you can see that we're actually down a little bit this morning. And that's actually what I want to talk about today. So the two big ones that we've been watching, or the group of stocks that we've been watching, has been Chevron, ExxonMobil. Again, now you look through ExxonMobil a little bit, bearish U-turn, well-offered bearish gap, closed near the low, two melted candles here. So not a lot of bullish momentum like we had over here in the start of this. Then you work your way over a little bit differently into this group. We're looking at CPE. We're looking at FANG. We're looking at COP. And we're not seeing the clean breakouts that we saw before. So that translates now into myself and everybody else is going to get gas this weekend. Gasoline prices edged lower after hitting record high last week. So that would now make me want to go over to the futures markets. And by the way, if you're not using this platform, finviz.com, it's one of the ones that I do most of the teaching with inside of our community. It's very simple to use. It helps you with sector rotation, helps you look at various markets and create your game plan. But the part that I want to get across now, and possibly setting up a trading idea, which is the airline stocks versus the possibility of oil stocks going down and oil futures going down. It's been a classic trade, really a classic trade for years in the market, that when oil goes up, airlines, no pun intended, the stocks of those go down. But now we're possibly seeing, and again, please put what I'm saying in context so that it's not a long-term picture. I'm talking about this week. When I'm talking about bank stocks and financials this week, when I'm talking about airline stocks, I'm talking about this week. We get a lot of conversations here, and there's a lot of people that discuss yesterday. What happened yesterday? And here's what I would have done yesterday. We don't do that here. We talk about what we plan to do this week. We talk about what we plan to trade today, which quite frankly, I think it makes us just a little bit different than a lot of people who do something similar like this. Because I want to give you ideas to trade now, like after the market opens, and from Monday through Friday, we want to have ideas for this week. And because I think what we do is a little different, I think that this kind of stuff is fun because we're talking about going forward, not going backwards. So if you're not a regular viewer of the channel, you found us for the first time, definitely make sure you hit that subscribe button because you'll get updates. We actually had a really cool video that we produced either Friday or Saturday we put out on the TradingView platform. I'll put a link up over here a little bit later to give everybody how to view that. But going back into FinViz and taking a look at the futures markets, we're going to head on over to energy. And then we're going to go over to the charts. And you can see here, actually, let me go back to the charts and energy. You can see that we pulled back quite a bit from last week. Okay, not so much heating oil. Obviously, natural gas is getting a lot of publicity, but we're pulling back here. So essentially, this in the futures markets that I'm watching, on top of the headlines about gas moving a little bit lower, that now has me wanting to look at some of the airline stocks. Now, I want to be clear. They are not in bullish order flow at all. They are not. Let's be clear about that. We're talking about developing a scenario for this coming week and what would need to happen in order for us to take a short-term swing trade, let's say Monday through Friday this week in this particular group of stocks. Well, if you've been paying attention to a lot of the other ideas that we've been talking about, some of these stocks that have had earnings and skyrocketed higher, we've been giving you the level of how to trade it. So if what we do, which is called stacking the order flow, is we're piling the longer term, how long has buying pressure been happening, right? Well, in this case here, and in a lot of the airline stocks, the buying pressure has been going down. But then we need to add some other factors in here, such as volume. And you can see now recently volume has started to increase dramatically. And one of the things you want to write down here, which is very important, is reversals happen on heavy volume pauses. It's such a subtle distinction, but when you're looking at a chart and when you're looking at order flow, you're looking at a bullish trend or a bearish trend, generally speaking, you see heavy volume pushes and light volume pauses. That allows us to make the assumption that based on our edge, we should get follow through. What we're seeing right now in a lot of bank stocks, what we're seeing right now in a lot of these airline stocks, as well as on the opposite side in energy stocks, is a heavy volume pause. heavy volume pause typically leads to a reversal. So if we are implying that that is potentially on the table right now, the next step for us to take as traders and thinking through is if we have bearish order flow, but a heavy volume pause implying a potential reversal, what does that mean for profit targets? And what does that mean for the right risk or the right share size? Well, if we're pushing down and sideways, the most important part is the fact that we're pushing down. So we can't fight that bullish order flow with aggressive risk because it's still pointing in the wrong direction. But as traders, it's our job to build that argument, to stack the pieces and say there might be a trade here. Now, I want to be clear about this because this is the part where a lot of people don't listen to the whole thing. Is I'm very, very clear about we're talking about the right position sizing in the direction of a potential reversal to the upside. Now, I purposely started out today talking about an edge, and some trades make money, some trades don't make money. In this case here, we're talking about a potential reversal. A reversal, by its very definition, means it's not going in our direction yet. We need for it to start going in our direction. But this is where you elevate yourself as a trader. And I want to go back to this just for a second because a lot of traders talk about reading the headlines and inflation, stagflation. Are we going to get bailed out by the Fed this week? I think that we need to put all of that in context. We're talking about this week. So everything I'm talking about right now with the financial stocks, what I'm talking about with the airline stocks, what I'm talking about on the, I just lost my airline stocks, bank stocks, and energy stocks. We're talking about trading this week, the week of March 14th. Because of the heavy volume pause in the airline stocks, I'm looking for a short-term rally this week. Because of the heavy volume pause in a lot of the bank stocks, and with the Fed coming out this week, I'm looking for a short-term rally. Now, here's the place where a lot of traders get into trouble. Say, wow, that's awesome. We have a plan. We know exactly what we're looking for this week. So I'm just going to get in there and buy them. No, you need a line in the sand. So remember, what we do is order flow and tape reading and a little bit of risk reversal that we just talked about. So let's just take Wells Fargo, for example. We'll drop on over into Wells Fargo. You can see the breakdown heading into today. Not a lot of great price action last week, barely hanging on by the month. So what does that mean? If you're looking at the sheet, and by the way, if you don't have this sheet, we give this template inside of our Facebook group. So all you got to do is click down in the description, get into the Facebook group and click on, you'll see it says guides in there and you can download this. So what does this sector rotation research do for the week? How does this set you up for the week? Well, it means that most of the stocks that we're looking at, most of the major sectors are not performing well over the Friday, the last 21 trading days, and the last week. So how does that affect bullish trades right now? How does that affect position sizing and initial profit targets? Well, it means the first thing we need to do over the last week is find some ideas that already had bullish order flow, that if we're expecting the market, today's futures markets, which are rallying, to follow through this week, the best ideas, the highest likelihood ideas are those stocks that already have bullish order flow in that same period of time that the market was going down. It's the classic relative strength play where the first thing you want to do is find ideas that you could buy that already were going up while they were selling. They were holding the bid. They were fighting that big move to the downside. So what's an easy way to do that? Well, I just kind of gave you a little bit of a heads up. You can go into FinViz, and we just looked at the futures markets. So what you want to do is you want to go over here to the map. And when you click on the map, now what I'm trying to do, and this is really one of the biggest things that I strive to do, and some, if you've been on our coaching calls, I can get really loud sometimes because I get really excited about stuff that I was confused about, didn't understand. And then when I learned it, it changed everything. So I get excited about teaching it. This is actually one of those things. So you can see on Friday here, most of the market was weak, but we did have a couple of pockets of opportunity. Oracle was actually strong on Friday. Pfizer, for those of us watching Pfizer last week, held the bid pretty cleanly here while the market was going down. And I'll just give you a very quick visualization. This is what Pfizer did last week, and this is what the market did last week. We're also going to take the sector that Pfizer is in, which is the XLV, and you can see Pfizer actually has relative strength to the sector. So that's just one way of doing it. What I want to do, though, is I want to go out a little bit further, and we're going to go out to 1 week performance. So you click on maps, and over here, we're going to go out to 1 week performance. Now, what's super interesting is you can start to see, again, that same pocket of opportunity. Oracle, Pfizer, Eli Lilly has been strong. T-Mobile has been strong. Some pockets of opportunity over here. Chipotle has been strong. And obviously some of these oil stocks. Basic material stocks have been strong as well, although they seem like they're rolling over a little bit too. So what are we seeing right now? We are seeing a potential change of trend by building the argument around the bigger picture. Now, this is really one of the biggest things to do, because when you go into the day, into the week, you create your game plan. We just did a little bit of relative strength. Now, what I'm going to talk to you about right now, and I'm going to give you a heads up on this, I'm going to give you a list of stocks that meet the criteria for March, for last week, and the last couple of weeks. Now, I do this for our community every day, but I want to start your week out at least with a list of stocks that performed well. So we just gave you a game plan for some of the airline stocks that if energy goes down this week, we're looking for airline stocks to go up. So some of those airline stocks that we're looking at, obviously we're looking at American Airlines. We're looking at, and the biggest thing you should be focusing on right now is here, the expansion in volume, a heavy volume pause. So American Airlines, Delta Airlines, you can see that a lot of them are, I'm sorry, I'm not even showing the screen. American Airlines, Delta Airlines, LUV is another one, right? So these are the ones that I'm going to be focusing on this week. Now, does that mean that I'm just going in there and buying them when the stock market opens at 9:30 today? No, absolutely not. I need for them to open, and I need to see that follow-up buying pressure comes in. So again, I want to be super clear. I'm talking about a trade this week. I'm talking about if energy stocks and oil futures start to come down this week, that will translate into a bullish week this week for airlines and cruise lines. So we just gave you a little bit of a heads up on that. We're also talking about the FOMC announcement this week, the Federal Reserve, Jerome Powell. I think it's fully baked in at this point, where a lot of people are questioning whether or not he's going to raise it. From what I see, from what all the news is, he's going to raise by 25 basis points. The only question is there a surprise because of inflation, disregarding the Russia-Ukraine situation, where he feels he needs to raise it by half a basis point as opposed to 25 basis points. So if all of that unfolds, the question on the table right now is, has that been priced in already? That's the big question that a lot of people are having right now. And we've actually, we put a poll out this week, which was kind of fun. We did that on the weekend, and we'll show you the results of that poll and what people are thinking about as far as here. FOMC on Wednesday, big week for a top question on the table. Is interest rate already hiked, priced in? And 60-40 people are saying no way, stocks are going lower. Now, here's what I think. Here's what I think. Again, getting into what's going to happen going forward. I think that these bank stocks and financial stocks have got beat up pretty good. I think that we can all, as a lot of people here pointed out last week, that Citigroup has a very big exposure to Russia. They're talking about a possible monster loss based on what's going on. But there's other pockets of opportunity that are showing heavy volume pauses, similar to what we just looked at in some of the airline stocks. Now, I want to get across, this is super important. This is me mapping out potential ideas and scenarios for the week. Get a lot of people saying, just tell me what to do in every market condition. Nobody can do that. You need, as a trader, to say, okay, the SPY is going up, the NASDAQ's going down, the Dow is doing this. Okay, I got a picture on the market, bearish to neutral at best. So then you go, what pockets of opportunity can I look at right now? Well, the last 6 to 8 weeks, we've been taking advantage of energy, and we've been taking advantage of basic material stocks. Now, what's kind of interesting is if we take a look at the basic material sector ETF, the XLB, not really that powerful. But this is why you want to make sure that you understand how to run your scans that match your edge every day, because there's always pockets of opportunity of the best stocks to buy now. And we've been pointing those out to you. I'll give you the list right now. So we're going to get into the stocks that we've been watching that look like they're rolling over a little bit, but this is why you need to hit that subscribe button, because I'm giving you these rotations literally every day, every week. So although the XLB, the basic material sector, has not been above anything, quite honestly, we have been tracking and trading Alcoa, which just had a really nice, clean run. We've been watching NUE. We've been watching STLD. We've been watching X. Now, they seem to be cooling off just a little bit as far as you can start to see heavy volume here as it's near the highs, and that usually means a little bit of exhaustion. So that's the pocket of opportunity that we have been watching. So this is where the market's bearish to neutral. So, okay, check that off. Okay, you go into the day in the week saying, okay, if I'm looking to trade today, what is the better likelihood of follow through? Well, the market bearish to neutral at best, simply because we're kind of still stuck in a range. Most of the sectors, which I just pointed out to you in this spreadsheet here, most of the sectors are not performing well. So that means if the sectors are performing well, the next level in the stock market power pyramid is now we need to go into groups. We need to go into groups and find some opportunity. Last week also, you'll notice that we talked about the solar stocks got a little bit of buying pressure, for lack of a better way of putting it. The electric vehicle charging stations picked up a little bit, not the electric vehicle stocks. Remember, we talked about NEO stock last week, and we mapped out what we need to see before we would start to take a look at NEO, and that stock hasn't met that criteria yet, so we're not doing anything. So the electric vehicle charging stocks that were in play last week that we were looking at are as follows, just to give everybody a little bit of a heads up. We've been looking at ChargePoint, and you can see why. Big double bottom here, classic technical analysis, a push and a pause, a push and a pause. So now this CHPT, we're looking for the next move higher after it has now bottomed out and rallied for the last 3 weeks. So remember what I just talked to you before about looking at that map and going over, okay, the market's been bearish, but where are the pockets of opportunity? When we say the pockets of opportunity, we're now working our way up the top of the sector rotation. Above that is industry groups, and above that are just the individual stocks. So what I'm showing you now are opportunities of some of the best stocks to buy now, which is the solar stocks group and the electric vehicle charging stocks, not the electric vehicle stocks, the electric vehicle charging stocks. And then in just 1 second, actually I'm going to do it now so you can take a screenshot of this. These are the stocks that meet the criteria over March, over last week, and over the last couple of weeks that meet a certain percentage return. And that's this list right here. So you can actually take a snapshot of that list right there. You can see when I updated it for the community, you'll get an idea of some of the stocks. We've had a couple of really, really good day trades in Caterpillar recently. $26 in plug is the level that we're looking for. We just mentioned Eli Lilly and Pfizer. Those stocks have been performing pretty well, and we're looking for JWN to catch a bid. So getting into some of the solar stocks, you can see why we've been looking at them. They've actually been rallying, and you can see they're actually flat. We're looking for another push higher here. So what we basically just walked you through across here is going deeper than just saying what's the big picture in the market. You need to go in there and take a look and say market, sector, industry groups, individual stocks. So we just talked about 2 different groups of stocks. Actually, no, more than that. We talked about the banks. We talked about the oil stocks. We talked about the solar stocks. We talked about the electric vehicle charging stocks, and we talked about the airline stocks. So there's a whole bunch of stuff that we just looked at. I just want to peek on over into the bank stocks and give you some ideas of the stocks that I'm looking for on a very short-term basis, trading for cash flow with the FOMC announcement coming into this week, looking for all of the selling pressure that's hit them this week to see a little bit of a spurt to the upside. Now, here's the big thing. This is what separates I'm in control of the outcome from trading doesn't work. I'm mapping out all of these 5 different industry groups this week, and I'm saying if this happens, then I plan to do this. And based on the big picture, here's the share size and profit targets I plan to go after. If that's my plan and it happens, cool. I'll put those trades on. If I start to see them holding the bid after the market opens today, after Monday's price action trades, then I'll have some levels to trade around, looking for some cash flow. Down move, heavy volume, pause, oil pulling back, looking for them, FOMC coming out this week, a lot of different things going on, right? But it's really just, if this happens, then I plan to do this. And based on that picture, this is the right share size and risk based on the order flow, based on how the bigger picture is looking, based on, again, going into the sector rotation, which is the sheet that we have here, okay? Just to give you an idea as well, some of the list of top stocks that we've had coming into this week, this list of stocks, which you can see is not really dominated by that many industries. There's no technology stocks here at all. couple of times last week, that list had 40 stocks in it, and it's all the way down to where it only has 9 now. So what does that tell you about the bigger picture of the market? The overall tone of the market is still bearish. So if we're looking for long opportunities, if we're looking for the best stocks to buy right now, I just mapped out a bunch of scenarios in those sectors, including the banks. So I'm just going to give you an idea of some of the bank stocks that I'm going to be looking at this week, which we just mentioned Citigroup, which obviously has a bigger exposure to Russia right now, which is also up a little bit today. But I will tell you the 2 favorite stocks that I have to trade, and you can see the expansion in volume here, JP Morgan and Morgan Stanley. Those are 2 in that area that I tend to trade the most of. And actually Wells Fargo is another one that myself and David Farris have been focusing on quite a bit in the community. You can actually see just from a relative strength perspective, Wells Fargo is actually holding the 200 period moving average, and a lot of the other ones are well below, much, much weaker. So just based on that simple order flow analysis, Wells Fargo is holding that last line of defense, and that stock will be one of the top stocks I'll be watching this week because it's already showing relative strength. And again, relative strength is relative here. It's clinging on the 200 period moving average, but a lot of these other stocks are well below. So that's how I'm mapping out the week. Airline stocks, if energy prices pull back today and continue to go down, I'm looking for a rally this week in airline stocks and cruise line stocks. That's another one, right? If we continue to see the heavy volume pause and we get follow through after today, say the market opens today and some of these bank stocks hold the bid, that's the language you want to use, hold the bid and close near the high. Best case scenario, they also go well bid, which is higher high and higher low compared to Friday's price action. Then we have today's opening price and today's close and today's low. So we have 3 different reference points to say, okay, if we believe that the selling is priced into 2022 into these financial stocks, and if this heavy volume pause we just had indicates a short-term reversal and we're heading back, including the FOMC announcement this week, then I could use either Monday's opening price, Monday's close, or Monday's low as a potential stop loss for a short-term momentum trade this week. Now, is that picking a bottom? Not really, because we're going into that shorter time frame. We're not talking about the bigger picture 365-day window. We're dropping down a little bit now to go into some cash flow. If oil goes down, obviously the oil stocks that we've been buying will most likely go down. Does that mean we're done buying them? No, this is a healthy pullback that we'll look for the next move to the upside, probably later in the week, if not next week. That's how I'm going to map all this out. We've also been looking at the solar stocks, which had 2 pushes and now are in a pause. JKS, Run, ENPH, SPWR, that's the list of stocks that I normally take a look at. Then we work our way over into those electric vehicle charging stocks, BLNK, CHPT, PLUG, and EVGO. Those are the stocks in that area. Then to really round out the game plan for this week and today, and again, you can take a screenshot of this, is you can work your way over here and have these stocks in your watch list. And you can see that a lot of the stocks I just mentioned, Plug, Caterpillar, we've been trading, CF has been really strong. It hasn't been able to get above that key level, but it looks like it keeps punching through close to 100. So we're looking for the next move to punch through 100. Nordstrom had really big earnings last week and has pulled back since then. You can see this big bullish gap has now pulled back. So we're looking for Nordstrom to go well bid today. It looks like it's going to open neutral, but we're looking for this buying pressure off of earnings to come back and push it back to the upside. And that's really how you have to map out your week. So when you're actually heading into the market each day, and again, I think this is something that I hope you're finding value in this, that I'm not talking about what happened last week. I'm talking about giving you the mental process of setting up, okay, the market, okay, the sectors. And again, just as simple as going into the FinViz map, which will give you a pretty good idea of how to do that. So when you go to FinViz, you click on maps and you just want to get a feel for which stocks perform well on Friday. And you can make a small list there and you can look. That's not surprising that the financial stocks, the bank stocks that we just talked about, Bank of America is another one that I haven't been mentioning. Then you go out to the little bit longer term performance and you go out to a little bit further performance, which is the last month. And you can continue to see Eli Lilly and Pfizer are 2 that I will definitely be watching heading into today. Okay. Let's see. Do we think the banks rally this week? Yeah, Matt, I don't know if you logged in, just now logged in, but that's everything we've been talking about for the last half hour. So yeah. And again, I want to keep this. And by the way, Matt, thank you for watching. I really appreciate it. We are talking about this week. Okay. We're not talking about the big picture. We're not talking about where we think it's going to be in the end of August. We're talking about this week. We're talking about all of the macro factors, the big picture factors in the world over the weekend. Oil prices coming down, oil futures coming down. What stocks? Again, think, okay, oil went to Costco this weekend. Gas prices went down. What can I trade on Monday or for the following week? That's what I was thinking this week when I went to fill up at Costco this weekend. So we got a lot on the plate. FOMC on Wednesday as well, plus options expiration on Friday, which adds another twist to this week, which also makes it interesting. So if this is the first time you're viewing this stuff with us, please do me a favor. If you find it valuable, make sure you smash that like button. It would let me know that this is the kind of stuff that you like. If you have follow-up questions to the stocks that we spoke about today, leave a comment below the video in the comment section, and I'll make sure I get back to you as soon as I can. And again, if it's the first time and you haven't done it already, make sure you hit subscribe so you get updates on this kind of thing. If you want to learn about getting involved in the boot camp or anything like that, there's also a link in the description. And more importantly, this spreadsheet that I show every day right here, it's got a lot on here, right? This is the rotation of everything that goes on during the week. I provide this template for you, plus some training videos inside of our Facebook group. There's no cost to join the Facebook group. It's called Top Trading Pros. Click down in the description and get the template for the spreadsheet, plus some new trainings. When you get into the group, click on Guide, and it will bring you to all of that stuff as well. So thanks so much for joining me here today, everybody. Hopefully I gave you a good roadmap for the week. It's going to be fun to watch this stuff unfold as the week goes on, so we can talk through some of the ideas and see how we did today. All right. Have a nice day, everybody. Thank you so much. I really appreciate it.